This could be the ideal time to act if you're thinking about purchasing Tesla stock. In 2023, analysts project that the stock price will increase fourfold. According to recent predictions, Tesla's stock price is expected to rise above $1,200 per share. That represents significant expansion for the business and is fantastic news for Tesla's investors and the electric vehicle industry as a whole. Will Tesla reach $1,200 then? To find out, watch this video through to the very end. Greetings to all, and thanks for returning to Everything Tesla stock. In the fourth quarter, Tesla plans to dramatically boost production of its best-selling electric vehicles, the Model Y and Model 3, globally. As manufacturing ramps up in the newer plants in Austin and Berlin in 2023, the company hopes to capitalize on this momentum. By the end of the next year, if Tesla's prediction comes true, the electric car maker will have caught up to Elon Musk's production goals for the current quarter and will be able to compete with the German luxury car maker BMW. The forecast, which spans the next 4 quarters, establishes an ambitious target of producing over 495,000 Model Y and Model 3 automobiles by the end of this year's fourth quarter. Approximately 95% of Tesla's output is comprised of just 2 models. With a production rise of more than 50% for the year, these plans will see Tesla beat predicted growth in the global auto market by nearly a factor of 10. Hopefully, this objective can be met in spite of remaining supply chain challenges, a weak economy, heightened competition, and shrinking backlogs of Tesla orders. Piper Sandler, a brokerage, projects that Tesla will ship 354,000 vehicles in the third quarter. Citi forecasts 369,800 car deliveries, while Troy Teslike projects 343,779 Model 3 sedans and Model Y compact crossovers to be sold. What does this entail for investors in EV manufacturers like Tesla? To find out, keep watching. In 2022, Tesla is expected to sell about 1.4 million cars worldwide. If it achieves or surpasses the predictions of these experts and generates the internal estimate for the next quarter. With 1.59 million Model Y and Model 3 units anticipated to be manufactured over the first 3 quarters of 2022, Tesla's production and deliveries have been phenomenal since the fourth quarter of 2018. Should this occur, Tesla is expected to sell more than 2.1 million electric vehicles by the end of the following year, surpassing the sales of Volkswagen's Audi brand and getting close to BMW's 2.5 million vehicles sold in 2021, the most recent complete year with comparable sales. But if gas-powered vehicle sales are taken into account, that production will be somewhat lower than anticipated. Having long been an optimistic analyst at Wedbush Securities, Dan Ives projects that deliveries of electric vehicles will reach 2 million in 2023, up from 1.39 million this year. In the preceding quarter, Elon Musk, the CEO of Tesla, informed analysts that there was a strong likelihood the business will achieve a global production run rate of 40,000 vehicles per week by the end of 2022. Tesla is anticipated to attain and sustain that production level for the duration of the first quarter, based on an internal prediction. The prediction also depends on a notable rise in output at Tesla's most recent plants, located in Austin, Texas, and Berlin. According to the plan, Austin would double output to almost 101,000 cars by the end of the third quarter of 2023, and Berlin would see a comparable increase from 51,000 to nearly 90,000 EVs by the end of the September 2023 quarter. By the end of 2023, the plants in Brandenburg, where Tesla has a facility close to Berlin, will be running in 3 shifts, according to George Steinbach, the regional economic minister. Large gains in output for Tesla shouldn't be surprising, according to Sam Fiorani, Vice President of Worldwide Forecasting at Production Tracking Business Auto Forecast Solutions, AFS, especially since Austin and Berlin's plants have been running below capacity. He stated, Berlin and Austin are coming into their own next year, and that's where a lot of this volume is coming from. According to Tesla's prediction, By the end of next year, production at its mega factory in Shanghai, which produced over half of the company's output in the first half of this year, is expected to stabilize. Having recently expanded its manufacturing, Tesla says it can now build 20,500 cars a week for the remainder of the year. Economic risks are also associated with the anticipated growth in Tesla's output. As Musk has already mentioned, growth has sharply slowed down globally, particularly in China, the largest EV market in the world, where Tesla faces up against competitors with rapid expansion. The supply of gas to power plants will probably create uncertainty in German industrial activity in the upcoming months. Even though Tesla would be extremely proud of itself if it could produce 2 million cars by the following year, that would only cover a small percentage of the company's larger goals. During Tesla's annual shareholder meeting, Musk announced that the business plans to build 10 to 12 factories by the end of 2030, with the new ones having the capacity to produce 1.5 to 2 million cars annually. Musk also mentioned that a second factory location will be revealed this year. With good momentum in its factories, the electric automaker looks set to close out the year strong and set itself up for massive expansion the next year. As of the time of this video, the stock is trading slightly under $300, but some analysts believe that throughout the next 12 months, the shares could rise dramatically, potentially reaching $360. These optimistic projections are mostly based on Tesla's increasing production capacity. The number of yearly deliveries could increase dramatically in the upcoming year, from less than 1 million in 2021 to over 2 million in 2023, according to Wedbush analysts. Ives increased Wedbush's 12-month price objective for Tesla shares from $333 to $360, noting the company's improved production rates at its high-output factory in China and its strong momentum as the year draws to a close. Tesla's factory in China faced major obstacles when the Shanghai authorities halted manufacturing activities earlier this year in an attempt to slow down the pandemic's development. In its second quarter statement, the manufacturer did, however, state that production rates had not only bounced back, but were setting new records. When investors take into account this growth potential in addition to Tesla's ongoing growth improvements at its California facility and its production ramp-up at the future factories in Texas and Berlin, 2 million deliveries in 2023 would start to seem possible. Ultimately, Tesla's manufacturing facilities are already set up to generate over 1.9 million units per year. Furthermore, there has been no announcement from Tesla's management that they plan to reduce their investments in increasing production capacity. Rather, it said that it expects to use up all of its available manufacturing capacity before the year is out. Musk stated that Tesla has a strong probability of finishing this year at a manufacturing rate of 40,000 vehicles per week during the company's second quarter earnings call. Here's where it gets interesting. ORK Invest CEO Cathie Wood has previously forecast that Tesla stock would be valued at least $3,000 by 2025. That's more than double ORK's own $1,400 price prediction for this year and more than 8 times the current stock price of Tesla. Even in the worst-case scenario, analyst Tasha Keeney wrote in a note that ARK anticipates Tesla shares would fall all the way to $1,500 by 2025. According to Keeney, ARK's price estimate has altered from the previous year due to the company's revised assumptions regarding Tesla's capacity to use capital effectively in order to finance its aggressive growth objectives. The money that Tesla anticipates making from selling auto insurance to its customers in specific states is currently being recorded by ARK. In addition, Keeney discussed Musk's proposed robotaxi hailing service, pointing out that ARK now projects that Tesla has a 50% probability of reaching completely autonomous driving by 2025, and that this year's service would generate an additional $160 billion in revenue. Without a doubt, Tesla's growth potential may be overly optimistic, and its estimates are open to risk. These days, investors are more aware of the dangers involved in growing the production of sophisticated commodities like electric automobiles, which need an international supply chain. Recent developments in these supply chains have made them more difficult than investors had anticipated, which has caused some analysts to lower their price expectations. But it's evident that Tesla is carrying out its goals effectively in spite of the problems. Though it's unclear right now, a record-breaking second half and a promising start to 2023 could be in store. Who knows? In the upcoming years, the stock price might perhaps triple to $1,200 per share.